Let's start with the big questions. What is accounting? Accounting is simply the process of recording, classifying, summarizing, and reporting financial transactions. In simple words, it helps business keep track of what it earns, what it spends, and how much profit or loss it's making. Let's take an example. Imagine you run a small stationery shop. Yeah, you sell pens, buy notebooks, pay rent, and receive payments from customers. But how do you know if you are earning or losing money? How? You track it using accounting, right? That's why we called accounting the language of business. Before we dive deeper, we have to must understand these basic key terms. Okay, transactions. Any business activity that involves money, like selling goods, paying salaries, or receiving cash, etc. Next, account. A place where we record all transactions related to one item. For example, a cash account, a rent account. Okay. Next, assets. Things the business owns, like gas, furniture, or a building. Yeah. Next, liabilities. Things the business owes, like loans or unpaid bills. Okay. Capital, the owner's investment in the business. We can also call it equity. Okay. Next, here it is income and expense. Income is those things that we earned, yeah, and expense is those things which we spent, yeah. Uh, and finally, debit and credit, the two sides of every transactions. We'll touch more on this in the next part. Okay. Okay. Let's see the double entry systems and accounting equations. So accounting flows the double entry systems. Okay. It means every transactions affects two accounts. One is debit side and other is credit side. Yeah. For example, take this. For example, if you buy table, yeah, with cash. If you buy a table with cash, it means furniture account is increasing. Yeah, you are buying is so we debit it one side and cash is going out. We are spending it cash on buying table. Yeah, purchasing while purchasing table we are spending our cash. So cash account is decreasing, so we create it, and it's the uh, other side of transactions. Okay, uh, and let's see accounting equations. Uh, Asset is equal to liabilities plus capital. This equations always stays balanced. However, we don't know, but this equations always stays balanced. Okay, let's look at the flow of accounting. The steps involved from start to finish. Step one, identify the transactions. Step two, record it into the journal entries. We also call it the book of original entry. And then step three, post it to the ledger account. Then prepare a trial balance to check for errors. And lastly, financial statements. We can also call it final accounts, which includes trading account, profit and loss account, and lastly, balance sheet. Uh, we will talk later on these topics on next video. Okay. And this is how raw data is converted into useful financial informations. Let's quickly recap what we have learned. Let's see first what accounting is. It's all about recording, summarizing, and communicating. Then key terms like assets, liabilities, capital, and then we have studied double entry systems and the accounting equations. Lastly, the full accounting process from transactions to final accounts. Uh, when you understand these basics, you will find the rest of accounting much easier to learn. It's like learning the ABCs before writing a paragraph. Okay, lastly, thanks for watching. If you found this video helpful, give it a thumbs up, leave a comment below, and subscribe for more engaging videos and shortly explained. Our upcoming videos will be on golden rules of accounting. We we try to make it super easy. Okay, see you in the next one.